Okay, I think this is taping now. This is kind of acting a little dodgy, so I'm not sure what's going on. Yeah. Okay, so we were to go through operating activities, and just to kind of go back again and start with a little bit of a refresher. We've got pretty much everything in front of us on the sheet of paper. We've got our comparative balance sheet, and then I'm assuming that you all went and calculated the change column, right? And you don't know what to do with the long-term assets or liabilities yet, but other than just get the change. And then we have our P&L, and we picked up the net income and put it down here, the 101,000, right? And then start analyzing. Oh, fill in the bottom 3 lines. Did you do that? Yeah, so you know, which in my little world is refreshing, I know what I'm trying to balance to. And we know that if I started with 63 and ended with 52, that I have a negative 11,000. That's kind of hard to read. A negative 11,000, right? Okay. So now we're just going to just start. Oh, and then the last thing before we actually start going through the comparative balance sheet is what? Scan. Yeah, scan the P&L for things like depreciation, for any non-cash items. Okay, Sherry, did you find any non-cash items on the income statement? Yes, what would you like to share with us what those were? Mm-hmm. So, what does this say? Adjustment to reconcile net income to net cash flow from operations. Sorry. So, what does that loss do? Did that increase or decrease your P&L? You do. You have to add it back. So, right under the net income of 101,000, you should add back that $2,000 loss. Jake, did you find anything else? Loss on sale of land. Isn't that what it was? Yep. Yep. Balance sheet. We're gonna, so let me, right now we're doing operations, right? The only thing that goes in operations is the scan of the P&L and the changes right here. What does this say? Current asset and current liability changes. That's all that goes in operations. Sherry, when we get to looking at our long-term assets, that accumulated depreciation account is going to help us look more in depth at those accounts. But for our purposes in this section, all you're doing is picking up depreciation expense. Good question. They tell us that in the other information, number 1. Okay, let's just kind of keep going around then. So, Jess, now I'm going down the balance sheet, and the first thing is my cash went down by 11,000. Have you got that entered? All the way on the bottom. We just did that, those bottom 3 lines, right? Okay, so read me the next one. Tell me what you did.
So the accounts receivable had an increase of 11,000.
No, I think it went down by 11.
Oh, it decreased.
Again, don't forget to read right to left on these things.
11,000.
Mm-hmm. Why?
So we did
Yep, they paid them off, so what do you have to do with that? You have to add it back. Good. Okay, Perry? Yeah, how come? Yep, so what do you have to do? You have to add it back. No, sorry, you have to subtract it. I bought more. But it didn't go through cost of goods sold yet. So it didn't impact my net income because it didn't go through cost of goods sold yet, but it did take cash. Sarah?
Prepaid expenses.
God bless.
So we're gonna add that.
Decrease in prepaid, so I used it up. It flowed through my P&L. It dropped my net income, but it didn't take cash, right? Add back. Jeannie. So now you're all the way on current liabilities, because, oh, I'm sorry, let me just ask you. Where do you think you go next?
Yeah, that's exactly where you go next, because the ones up there, they're the property plants.
Yeah, the rest of it's all long-term.
So the accounts payable decreased by 43,000.
Yep.
So you
Yeah, if my AP went down, that means I paid it off. But it wouldn't be reflected in the P&L because it's cash and AP. So decrease in AP, 43,000. Okay, is there anything else that goes in the operating sections that y'all can see? So let's go ahead, tally this up. What did you get for the subtotal of all the adjustments? I got 16, 56, 67, 63, 69. Yeah, I think it's 16. Now, how are we subtotaling this again? Yeah, just put it just right next to it. And this 101 plus this 116 is going to be what? And don't tell me the number, but I mean, it's a word. What is it? It's net cash flow from operating activities. In other words, for being in the business of what it is you do, we generated net income of 101, but net cash of 117. Net cash flows from operating activities. Okay, let's do a review. Does anybody have any problems with this or need clarification on any of this? Let's do a review of what we think belongs in these next two sections. What, Gretchen, goes in investing activities? But I mean from an overview, like a big picture standpoint. What kinds of things go in the investing activities section? That's it. When we buy and sell property, plant, and equipment, because those are investments. They're productive investments, right? They're what we're going to use to generate operating income. So what we do here is going to impact operations. A, and then B, buying and selling stocks and bonds in other companies, because that's an investment. Melanie, what goes in financing? Okay, can you be more specific? Is it our stocks and bonds or somebody else's? It's ours, right? So we're issuing bonds, we're issuing stock, we're buying back stock, we're paying dividends. Hey, the interest revenue and the dividend revenue go up where? Operating. As well as the interest expense, which doesn't make sense to me. I would think if you paid interest on your bonds, it should go down in investing. It doesn't. I know, that's super confusing to me. All right, so let's take a look. Now now we've just done a refresher here. Let's continue to look down our balance sheet at some of the non-current assets and liabilities. So the first thing, and the way I'm going to teach us is I think that the best way to do this is always to set up a T account. So set up your T account for land, plug in your beginning and ending balance, and let's talk about what happens. Yeah. Dividend revenue and interest expense. Yeah, just because it's not really very intuitive. Plug in your beginning and ending balance for land. So I started here and ended here, right? Does that mean that only one transaction occurred? No, there could be 15 transactions in there. In the real world, how would you know what really happened in there? What would you run? Kind of report. Now I think you're going to need to see detail in the general ledger, aren't you? Aren't you going to have to really go into the general ledger and run a detail of that account? Right? Because there may be 16 things that happen. But in our little world here, they just tell us, number 2, additional information, what did they say? Land was sold at book value. So now let's do another little refresher. What exactly is book value? What minus what? Nope. Cost minus accumulated depreciation. There's no depreciation on land. Like there's no crying in baseball. So cost and book value are the same. Right? How much did I pull off of my books? And again, in the real world, you're not setting up a T account, you're just running a general ledger detail report. So with land, no idea what that guy was. With land, it's a pretty easy calculation because you don't have any AD. You need to reacquaint yourself with this concept because this will be pretty integral when we start looking at buying and selling equipment. So I sold the land for $25,000. Was that a cash inflow or outflow? It was an inflow. Which section does it go in? I think that's an investing activity, and I'm just going to call it exactly what it is. It's ready to blue sale of land. Now I can illustrate the point that I was trying to make before, which is how many places does the sale of a long-term asset impact? Yeah. Here's the amount of cash I got for it. And in operations is either the loss or the gain. And I said that a couple times last week, but you haven't really seen it practice yet. If I sell an asset for its book value, do I have a gain or loss? Oh, sorry. So that wasn't a good example at all, was it? that's equipment. My bad. Nope, we'll see that, that didn't make my point at all. Because I did sell it at book value, thank you. Okay, let's go to the next one. Let's go to equipment, set up your T account, plug in beginning and ending balances. And whenever you do something with an accumulated depreciation account, you've got to set that up right next to it. So go ahead and set up both of those, please. Your equipment beginning and ending and your AD beginning and ending for equipment. And then the AD started at 42 and ended up at 51. So I'm just pulling these numbers off of my balance sheet, right? Okay. What impacted AD equipment that we already know about? The sale is going to impact it, but we don't know what that does to it yet. What number can I plug into AD? I'll give you a hint. We've already looked at it in the operating section. I think it was 54, wasn't it? So is that 54,000 going to debit or credit AD? Sure. When you make your depreciation entry, what do you debit? Depreciation expense. What do you credit? AD. So I'm plugging in numbers here. What's the ending balance? I can't even read my own writing. 51. Okay. Can you plug in then what the debit was to AD? Figure this number out for me. And again, this is an academia. We're doing it this way. In the real world, you'd have a GL detail and you would clearly see these numbers. $96 minus what gives me 51? What is it? 45. Why would I have debited AD? I sold something. So when you sell something, the journal entry is to do what? Yeah, credit the equipment, debit the AD, debit the cash, and debit or credit the gain or loss. Right? All right, so let's do the same to the equipment account. I started with 221. I ended up with 277. Looking down in the additional information, fill in what you can into the T account from number 4, please. Under the additional information, use that to fill in what you can for number 4. And then, if you think you're clever enough, try and figure out how much cash you got from selling equipment. Do you understand the instructions? So take number 4's information, plug it into your T account, and from that you should be able to figure out how much cash you sold your equipment for. So, what's the first thing in number 4 that we need to plug into our T account? Yep, is that a debit or a credit? Debit. How much was it? Okay, and then the second part of it, so did anybody back into how much cash I got? What number do I need over here to make this balance? Yeah, so 221 plus 82 is 303. 303 minus, excuse me, 277 is 26. Is that how much I sold it for? No, that's the what? Thank you, Jess. Go ahead.
That's the cost of it that you initially paid.
That was the cost of it. The sale price doesn't go in and out of your asset account. Your cost does. So let's just make sure that we've got all of our numbers tying into the information. So they're telling me that it cost what? Yeah? And what did we just figure out? That doesn't make sense. How can my AD be 45?
Because you get $2,000 difference between what the book value was and what the sold for.
Yeah, but I didn't pull off 45 of AD with a cost of 26. Is that right? That AD account, did we do that right? Huh? 42. Sorry. 42. We started with 42. We ended up with 51. So we had a $9,000 increase. 96 minus 45 is 51. Okay, we've got something a little askew here. What is that?
The 54 is
And I know none of it was building because my AD and building didn't go up at all. And I don't have any other depreciable assets. All right, well, I'm really quite confused on this. Okay, well, let's just kind of keep forging ahead back up here on this calculation and something's going to pop what happened. My point is, obviously, we didn't have AD of 45 on something that cost us 26. So let's just kind of keep going. Did they give us the book value? What they say the book value is? No, that says equipment costing 26 with a book value of 6 was sold, was sold for what? And the difference between book value and selling price is always your what? Gain or loss. So let's just see if this makes sense. So what, did I have a gain or a loss? Looks like I have a loss. And does that tie to my P&L? Yeah, so that all works. This is the number that's puzzling me. Right? Obviously. But so I'm still confused what happened to that other $25,000 of debit here. I don't see that, do you? Well, huh? Well, that's, yeah, exactly, that's 25, but you don't depreciate land, so how does that make sense? All right, well, let's just leave that great puzzle out there for the moment. I've done this same statement of cash flows for the last 10 years, and I've never had this issue, so I really don't know what the problem is. And I don't have a little magic cheat sheet that shows where I did my T accounts, which I'm sort of wishing I had right now. Okay, but let's just kind of keep going ahead to illustrate this. So where do any of these numbers go? Where do you want me to put that, Sarah?
I was gonna say to put the 4,000, so the.
Mm-hmm. Was that the cash that I got? It was. Yeah. So is that investing or financing? Yep, so that's an inflow. What else? There was one other thing that happened from that T account analysis. Did I pay cash for that? Yep. So where do you want that? Purchase of equipment. Inflow or outflow? 82. And what are we going to call 29 plus 82? That's negative 53. What are we going to call that number? Yeah, except for when it's out, when it's money going out, it's called net cash used from investing activities. Net cash flow used from investing. Okay. All good? All right, let's keep, okay? Let's keep going. So have we done all of our assets? Have we looked at the changes in all of our assets? Yeah, I think we're done with those. So now we're down to liabilities, and you can, and equity. That should say liabilities and stockholders' equity. And bonds payable, common stock, and retained earnings are all basically associated with which section? That's financing. So let's see, Joe, why don't you take the first one? It looks like our bonds payable went from 290 down to 245. It will, and it tells us in the other information what happened. That bonds converted to stock is a significant non-cash investing and financing activity. So at the very bottom of your statement of cash flows, you're going to write significant non-cash investing and financing activity. So in other words, is that impacting cash, that transaction he just wrote or read? No. But it is got to have its own little section down here, right? And how was it? Did I convert the bonds to stock? Yeah. Yeah. Converted $45,000 of bonds payable to 45,000 shares of $1 par value common stock. Or something along those general lines. In other words, it's significant, but there's no cash trade at hand, so it doesn't go up there, does it? Okay, what happened to my common stock account, Monica? Okay, how come? Nope. Normally it would be because I issued stock, but what happened? We just wrote it. I did the conversion. So I issued $45,000 of par value common stock in exchange for calling in the bonds. Why would a company do that strategically? Okay, good. Well, yes, or it's called a recapitalization. In other words, for whatever reason, and there's a series of reasons that I'm not going to go into, but I want less debt, but I'm willing to give some ownership away. It's an expansion technique. It's a recapitalization policy. In other words, we're changing the structure of how we are doing our equity and debt financing. So far I don't see anything that goes up here, do you? One more account. By going all the way around. Yep. Set up your T account. Plug in your beginning and ending balance. Plug in your net income and try and figure out our last item. Set up your retained earnings T account. Plug in your beginning and ending balance. We know that net income impacts retained earnings, so you got to plug that in. And then let's see if we can figure out what happened. The moment you figured out what happened, you should know what to do with it, and then you should see if your statement of cash flows balances. And I'll give you a hint, if you figured out what happened, it should look a lot like number 3 in the additional information. $372, so it looks like my debit has to be for what? And why do we debit retained earnings? Because what? No, the income summary closed out here. Why do we debit retained earnings? What drops retained earnings? Well, if you had a net loss, it would drop it, but we didn't. Not even paying them, but doing what, Jess? Declaring them. And they gave that to us in number 3, but I wanted you to go through this process because I may or may not give it to you. Declare dividends. And the reason I made such a point about it doesn't mean paying them is because when you declare dividends, you guys, what's your journal entry? Debit or credit? That's my debit. Debit retained earnings, credit dividends payable, $75,000. I have no idea when I'm going to pay them off. So if my point is, and you're going to see this on the extra credit, if I have a dividends payable account and I declared 75 grand in dividends, I've got to analyze that dividends payable account to see if I paid cash or not. I don't have a dividends payable in this example, so I did pay cash. But if there was 75 grand sitting in the dividends payable account, would you put that to your statement of cash flows? No, because I just done this. I paid them, had I? The fact that I don't have this account says to me I paid it. So I can go up and put it in the statement of cash flows. Are you with me? That dividends payable would be right there by accounts payable. And you would have seen it when you were going through analyzing your current assets and current liabilities. And that's why this thing is such a puzzle. Can you interconnect stuff? You would have said to yourself, ooh, when I get down and do my dividends and retained earnings, I better remember to kind of check up on them. All right, so does your statement of cash flows balance? What do you want me to put under financing activities? Paid dividends, yeah. Good. And then what are we going to call our subtitle here? Yeah, I used it because this is a what, negative number? And I think if you've got one number, you can just bring it straight over. You don't need to subtotal it because there's nothing to subtotal. Oh, no, that's all right. You do have to do that. Net cash flow used. Huh, it's just doing that weird. Net cash flow used from investment. Used by investment. No, financing. Okay, does it balance? 117 minus 53. Minus 53 minus 75 does give me 11,000, doesn't it? Negative 11. Now, this is only half of what you're going to be required to do in this chapter. The other half is you're going to tell me what this all means. So before you had the statement of cash flows, you had a P&L that said you earned $101,000 in net profit. Your balance sheet, actually pretty frickin' stable, 868 to 851. Would you invest in this company? What does it tell you about this company and why or why not? Anybody want to take a shot at anything that you see up here? That says something to me straight away. They made $117,000 doing whatever it is that they do, and they took 75 grand of that and returned it to the shareholders. That's pretty attractive. For the shareholders, yeah, well, that's why I said I'm an investor looking at this. Yeah. Well, or anybody. I'm looking at the solidity of the company. They paid down a lot of their current debt. Do you like what you see in the investing activity section? And why or why not?
Just looking at the numbers, maybe not so much, but with that equipment, as long as it doesn't last, they're not going to have to maybe buy that equipment again. So,
Do you want to see this? again, we don't know what they're doing, but let's say they're not land developers. They're anything in the world but land developers. What have they done? They sold an asset to do what? To buy some equipment. And let's say they're like, say they're a toy manufacturer. Is that a good thing or a bad thing? I want my company that I'm investing in or working for, loaning money to be keeping up with new technology, new equipment, new machinery, new advances, right? I mean, you need to know a lot more than this, but I'm just saying, snapshot of this company is they made money doing what they're in the business of doing. They paid out, 65% of that in the form of dividends, and they've sold something that they're not in the business of doing to invest in equipment to further their operational health. I don't know what more you'd want. And then they called in their long-term debt and issued stock, so they got out from underneath interest payments. Okay. So with that, we're not going to have time to go over the little bit of homework that I gave you for today. But for Monday after Thanksgiving, Monday, the practice problems are due. Wednesday, the 2nd, the extra credits due, as well as the problem that's due for points for the chapter. Okay. If I don't see you, have a wonderful Thanksgiving. Celebrate, refresh, rejuvenate, regurgitate.
In fact, I think you should cover it. If I were you, I would, if I lived in it, I'd like to do
If there's something wrong with the streaming software, I don't get an email and then I can't do it. I will tell you, I am the only professor I know that does this. So it's not a given thing by any stretch. Do you watch them ever? Did you ever watch these? Go back and look at them later? No. You do? Okay. Yeah, okay. Yeah, that's what it's good for. Yeah, that's what it's good for. Yeah. 4, 5, and 6, yeah. No, 4 was, what was 4 was the start of the business expenses, like the rentals and the, yeah. It's all open everything, same as the last one. You can't, in tax, you can't even really do it without.
Oh, right. Are you kidding?